Claiming depreciation on your duplex investment property might seem like a complicated topic, but it's pretty easy once you know what steps you need to take. Hi everyone, Tuan Duong, founder of DuoTax, here for another video designed to help you become a better property investor. Duplexes are among the most common dual income investments in Australia because it allows property investors to improve their equity over a short period and ultimately fast track their way up the property ladder. And the great thing about duplexes is that they offer massive tax benefits through tax deductions, including depreciation. Now, if you're not familiar with what depreciation means, it's where you write off a percentage of the cost or value from an asset over time. And there are some really good reasons why Australians need to claim their depreciation on their duplex. So in this video, I'm going to show you how we can claim depreciation on your duplex investment property. But before getting into it, we want to be clear that this video is for informational purposes only. In no way should you interpret this as tax advice. We always recommend working with a qualified accountant or tax agent to give you the best advice for your situation. Now, the ATO allows all property investors to claim their rental property expenses, including depreciation, as a tax deduction, as long as they continue to generate rental income from that property. It's no different for duplexes, but the difference here is that the owners of duplexes receive the benefit of higher tax deductions because you can claim on both properties if they're both rented out. For example, if you use advertising platforms to find tenants, you can claim that as a tax deduction for each advertisement posted, as long as both sides are generating rental income. Or you may wish to seek legal assistance when it comes to preparing the rental documents. In that case of a duplex, you'll need 2 rental agreements drawn up so you can claim the deductions on the cost of drawing up each agreement. To find out more about the tax deductions you can claim, check out our video that covers 17 tax deductions you can claim on your investment property. But without a doubt, tax depreciation is one of the most significant tax deductible expenses you can claim because there's double the amount of depreciable assets you can claim on your duplexes. This is because there are 2 depreciation opportunities when it comes to a duplex site. So you can claim deductions on your capital work assets and your plant and equipment assets on 2 sets of bedrooms, 2 sets of kitchens, and even 2 sets of laundries in some cases. Let's look at the kitchen, for example. Each kitchen will have its own oven and a stovetop. So each year, the depreciation of the oven and stovetop in duplex side 1 and duplex side 2 will be tax deductible expenses. But you have to keep in mind that you'll have to be renting out both units to claim depreciation on each unit's assets. In other words, if you're only renting out one side of the duplex and occupying the other side, you'd only be able to claim depreciation on the structural components and plant equipment assets of the duplex that you're generating a rental income from. You won't be able to claim depreciation on the side that you're occupying. Okay, so how do you go about claiming these deductions? Well, to claim depreciation on your duplex, you'll have to identify the value of structural components and all of its plant and equipment assets. Most of the time, this means that you'll have to consult with a quantity surveyor. Once the structural components and assets have been valued, the quantity surveyor will draw up a depreciation schedule. The purpose of a depreciation schedule is to outline the value of both your structural components and plant equipment assets, as well as how much it has depreciated and will depreciate. This will give you a clear idea of how much depreciation you can claim on your duplexes. So if you want to get your hands on a depreciation schedule for your duplex, all you need to do is follow these 3 simple steps. Step 1, get in touch with our team at DuoTax today, and we will ask you a few simple questions to see if your duplex qualifies for depreciation. Step 2, you can order a depreciation schedule over the phone or via our online order form, and we will begin preparing your schedule. And step 3, within 5 to 10 business days, your personalized depreciation schedule will be delivered to you and your accountant, and you can start saving those dollars. I hope you found this video valuable. Make sure that you check out our YouTube channel to subscribe for more. And if you know a friend, colleague, or even a family member who needs to hear this, please share this video with them. I'm Tuan Duong from DuoTax. I'll see you guys next time.